Hi, welcome to the channel. Today I'll be covering on Q4 earnings. Do note that Q4 earnings may signal a change in fundamentals. For those who have looked at my valuation video previously, please do take note, review the numbers, and make your own independent decision. As usual, this video is just for educational purpose only. Do not treat this as investment, legal, nor tax advice. Always do your own due diligence and seek qualified help if needed. Sea Limited total revenue was up 106% year-on-year to reach 3.2 billion, while gross profit was up 146% to 1.3 billion for Q4 2021. I called it a modest showing as the growth rates have came down on the back of opening of the economy, but these are still very good numbers. Starting with digital entertainment with Garena, this is where the problem lies. The flattish growth in Q3 got more investors concerned, and the sequential dip to 1.1 billion in Q4 raised further issues. In fact, this is one of the key highlights of the earnings call, which I will elaborate on later. Moving to e-commerce, revenue was up quarter-on-quarter by less than 10% from Q3 to Q4. This was a disappointment as I expect at least a 15% growth, as Q4 is seasonally a strong quarter when consumers spend more. Management went at length to further disclose the profitability of Shopee markets to cushion the bad news at its gaming side. Lastly, financial services, which is SeaMoney, showed good momentum, growing by 49% sequentially as quarterly users went up 90% year-on-year and total payment value increased by 70% year-on-year. It's very much in the early stage given that its revenue is about 20 million a quarter compared to billions generated from gaming and e-commerce. Momentum is good here, and management provided guidance for SeaMoney for the first time, which is 155% year-on-year growth in full-year revenue. To sum up, it was great numbers by Sea Limited, as it's rare to see a more than 100% growth in Q4. In comparison, Shopify grew for 41%, Lazada together with other international business did 18%, Amazon e-commerce was down 1%, Mercado Libre did 74%, so you can see Shopee had the highest growth among them at 89% year-on-year. This is where the nightmare starts. Investors are used to seeing a 100+% growth for many quarters, and that is poised to decline drastically to only 30% based on management guidance. The drag came from Garena booking that is projected to be down 35%, pulling down the growth overall across e-commerce and SeaMoney. Therefore, I will focus on two key areas from Q4 earnings. Firstly, it is the adverse news in terms of normalization and impact of regulatory action in India on Garena. Then I'll talk about the route to profitability for Shopee, which has always been a bear case against Sea Limited. You can possibly view this as both good and bad. I will share more later. Garena bookings declined sequentially by 8% for the first time in recent quarters, mainly due to 17% drop in paying users, which is offset by an uptick in average revenue per paying user. This suggests that Garena may have upped its price in terms of gaming items and services, but that's not enough to mitigate the loss of 16 million or 17% lesser number of paying users during the quarter. Management attributed the worsened numbers to the opening up of economy, which means lesser time spent on games, and the trend was observed across all markets. You can see that Free Fire is still second globally by average monthly active users, which means it's unlikely that Free Fire has lost its player to other games. I instead infer that it's an industry trend where more players have spent lesser time on games and therefore lowered spending. Garena will continue to engage its users through new features like Craftland that allow players to create custom maps and having BTS, a popular Korean group, as ambassadors. For clarity, Q4 numbers are unlikely to have impact from the India ban since it was only reported in 2022. This means the number on screen is purely for normalization, and more pain is expected to come next quarter if there is any impact from India. This year will be a challenging one based on management guidance. Total revenue from gaming this year is expected to normalize back to 2020 level of 3 billion full year or 750 million per quarter. This number has begun normalization, India regulatory action, and offset by new games in the pipeline. Management clarified that the focus for new games will be on attracting new players and improving user engagement, and will only monetize at the later parts of the year at the earliest. So don't count on these games to save Garena. But it's vital to see new games being developed to diversify away from Free Fire. A solid gaming franchise needs multiple household games. Also, we expect to see games of other genres which may cater to players who are not into first-person shooter games like Free Fire. Management mentioned on efforts multiple times to add new games in the past. For example, Canadian game developer Phoenix Lab was bought over by Garena for $150 million in 2020. Therefore, it's timely to see how management execute on these opportunities to uplift the decline in Garena. We need to see more games gaining popularity to prove that Garena is not a one-hit wonder. The thesis of C Limited has always been relying on the growth of profitable gaming business and reinvesting the profits into a hyper-growth but loss-making e-commerce. Therefore, we were able to see 100% plus top-line growth at C Limited level. But Shopee requires large capital at the infancy stage, and the ability to self-fund with Garena profits was so crucial for the first few years. This means that a decline in Garena has long been a worry, as it will affect the growth trajectory of Shopee. After all, every game has its own period of glory and will decrease to a stable rate as gamer preference changes. The saving grace is Garena didn't decline until now, as when Shopee has become an e-commerce leader in Southeast Asia. This means that going forward, Shopee has reached a turning point where it has to prove its business model to be able to sustain by itself without relying on Garena. It will have to transform from requiring cash to being profitable to generate cash by its own within its mature markets and pumping this cash back into reinvestment for new markets. Imagine if Garena matured and declined much earlier, Shopee would have been able to self-sustain and would have posed a bigger challenge to C Limited. However, you also may argue from another angle, the decline in Garena may have forced a change in gears for Shopee to move into profitability mode. If gaming growth continues, e-commerce would have been able to continue its aggressive growth path of reinvestment. I'm offering an alternative view here for discussion. I'm more inclined to think that profits in mature markets will be better, as this will validate my thesis that the e-commerce business is profitable at scale. In a nutshell, the company as a whole will have a slowdown in top line probably, as management has guided, and we should see narrowing loss that eventually ramps up to increase profits when the e-commerce business, followed by C-Money, is at scale. As you can see on the chart, the loss per order in yellow declined over time to 45 cents in Q4 as the commission per order in blue increases. The commission, also called take rate, has been mentioned by management to be at high single digit now, and increasing into low double digit area is reasonable in the long run compared to what the mature players are charging. In other words, the chart illustrates what the management described as scaling its platform to be able to provide value to all stakeholders. For example, sellers and buyers must be deeply entrenched in Shopee in terms of behaviors as well as from an economic perspective before we can talk about monetization. Once at scale, we can see profits, which should be the case for Southeast Asia and Taiwan by this year. Shopee will be the first major e-commerce platform to be profitable in these markets, and this is big news. For the first time, management disclosed the regional level profits per order. You can see 29% improvement in core markets, 40% in a two-year-old Brazil market, and a decline by 10% for Shopee as a whole due to increased contribution from new markets. Remember I explained on previous videos about unit economics? In new markets, each order makes a loss, which means total loss widen as you sell more. The thesis is that eventually Shopee should be able to switch from loss to making massive profit once the platform is at scale. So far, trends are pointing to the fact that the business model is viable. Management reiterated that the playbook has succeeded across 7 distinct markets in Southeast Asia and Taiwan. This is a major achievement. If you think about successful players like Amazon and Alibaba, they dominated across regions of similar language and culture in America and China respectively. In comparison, countries across Southeast Asia have consumers of diverse backgrounds. What works in one country does not mean it will work in another. A hyper-localized approach adopted by Shopee has proved to work. Riding on that execution record, there was rapid growth in Brazil in the past 2 years, and thus loss per order has improved, but still long way to go from a loss of $2 per order. Management shared that LATAM and other key markets already have major players who are profitable and alluded that Shopee can be the same as well. In Europe, France will stop operations after the 6-month pilot, while Spain and Poland will continue to operate. This shows that management is open-minded to attack new markets while having the discipline to back off if there's lack of momentum. However, you may also view this as a result of the decline in Garena. There's less funds now for reinvestment from gaming into Shopee. Resource is more scarce now and therefore not being able to continue the French platform. Personally, I'll be more assured for more investment into new markets if mature markets can turn profits to back up management claims that their strategy works. This is something you have to think about and form your own view. In summary, C has reached an inflection point and we may no longer see 100+% growth in top line and can expect lowered loss and eventually moving to profits. This starts from the expected decline in Garena growth and focuses now on sustaining the franchise. We have to see great success in its new games for Garena to return to its growth runway. Without reinvestment from Garena, Shopee has to rely on its own. This means turning profits in Southeast Asia and Taiwan to continue investing towards new markets like Brazil, LATAM and Europe. Profitability in mature markets are key to validate that the strategy works and back up management decision to pour more money into new geographies. Lastly, seed money though small but is expected to grow fast. For the first time, management is giving guidance which is 1.2 billion full year revenue or a 155% growth year on year. For context, this is 1/4 of Garena bookings in the past few quarters. Hopefully, seed money can grow faster to make up for the fall in Garena. It's expected to be cash flow positive next year as a first step. I will leave here with management remarks of having all three business lines to be self-sustainable come 2025. Given the large drawdown in C share price, one has to be clear of the thesis and management execution to date and make an independent decision on the next steps. No one cares about your money more than yourself. Do always do your due diligence. Thank you for tuning in.